Tom Lee is our headliner today. He joins us now. He's the managing partner, of course, and head of research, also a contributor. It's good to see you again. Thank you again for helping us guide our investing viewers through election night. It was good having you. So what do you make now? You've had a chance to digest a little bit of what's happened. Yesterday was, felt euphoric. Now what?
Well, yeah, first of all, Scott, thank you for having me on election night. It was historic, and I really enjoyed it. The move yesterday, 3%, the best move in the history of any post-election rally, I think needs to be respected because it really highlights one of two things or both. One is that there was so much de-risking into that election. Actually, it was unusual. We actually fell 2 weeks into election day. That happens like about a third of the time. And the second is that animal spirits could be unleashed because of the interest and belief that there's deregulation and mergers and a pro-business environment. So I think it's a very respectable move, and I think it sort of argues we have 5 to 10% upside into year end.
At what point, though, do you get on board with Barry Bannister's idea that the train could be leaving the station heading, full speed to Crazy Town?
Well, he's sort of structurally correct that, this market top is not going to be because of someone's going to have a problem with PE or because a recession's going to happen. I think it's very likely, in the next 6 months, the top is because either firepower is exhausted or expectations have become unhinged on markets. We can measure either, right, we can look at margin debt. That's just been flat for the last 4 months. So the market's been up, and most investors have been de-risking. That's fuel for me, upside fuel. And when you look at sentiment readings, it's not extreme. In fact, the VIX was elevated and only normalized yesterday. So I don't think sentiment's extreme.
Gosh, I was just going to ask you about the VIX. It's funny you went there. I'm staring right at it. I mean, it's down 30% on the week. At just a full-blown collapse, right? Don't forget, we were above 20. I think we were at 22 at one point last week. We're barely above 15.
Yeah, it was actually very interesting to look at the VIX futures curve. But on election day, the VIX futures curve was over 20 all the way through August of next year. It should be around 15, 16. The markets were pricing in tumult and uncertainty for like 9 months, 10 months. So I think there's a huge amount of re-risking taking place. I don't think people got their exposure yesterday and today.
I mean, look, you I know, thought that we wouldn't know the outcome of the election for many weeks. I think that was your base case coming in. So I think there's a lot of surprise, rethink, as we look at where this market might be able to go. On that note, you do have a new ETF, which I want to talk about. It's called the FundStrat Granny Shots U.S. Large Cap ETF. Granny Shots being that you think these would be a little bit easier to make, right?
Yes, that's right.
How'd you build it? We're talking about names. I hope we show this. I think we have produced this up. Tesla, Goldman, JPM, Johnson Controls, Caterpillar, Emerson, TransDigm, Eaton, Oracle, Ingersoll. That's the top 10. But how'd you build that?
The Granny Shots ETF is really built upon the research model we used at FundStrat. That was a thematic core stock portfolio that we had been using since 2019, so for 6 consecutive years. It takes 7 what we consider relevant market themes, and it finds the most correlated stocks to those themes, whether it's AI or millennials or Fed easing or improving PMIs. And then the stocks that appear in the most frequently across themes are our Granny Shots. And Granny Shots is named after Hall of Famer Rick Barry's way of shooting free throws.
Some of us do remember that. We definitely do. Tesla's the number 1 stock. The weighting is 3.25%. You want to just talk about the move in that stock this week and what it means to you in context of how you built this and where you think it can go?
Yes, Tesla has, in our research product, had been appearing since inception, since 2019, because that company has a hidden asset, which is its AI and intellectual property. And now, of course, the intellectual property built around all this infrastructure they own. So it's a company that, to us, looks undervalued because people look at it as a car maker and look at current margins and earnings. But as we know, there's a lot of new initiatives, whether it's robotaxi and robots and now, of course, there is a political angle that you guys well discussed, and I think it can only help Tesla.
Tom, be well. We'll talk to you soon. Appreciate you. It's
Thank
Tom
you.
Lee, Fundstrat.
I was just looking at the Nvidia versus Apple equation in terms of, market cap neck and neck right now. Well, Nvidia has about a third of the revenue in the coming year and about half the net income. So you could obviously say it's a more expensive stock, but it's growing so much more quickly. So in the short term, first of all, there's no brand new reason to buy a stock because it's in the Dow. History says that's not at all a reason to buy. There's not a lot of money indexed to the Dow. It's much more about, the way that it's validating its current role in the new tech economy, which we sort of knew already. So again, I don't think it's a sell the news. Maybe it's a buy because of the capitulation on Intel. But at this point, it seems much more about the Dow trying to stay relevant.
All right, good stuff.
Let's take a check on shares of Nvidia this morning. Piper Sandler naming the stock a top large cap pick and saying it's a must own for the ramp up of its Blackwell chip, rating that stock an overweight with the price target of 175. The price today, $148.17.
You mentioned some of the hyperscalers, guys. Nvidia, a couple nice notes. One is Piper makes it a top pick. And then this Melius note is pretty interesting. Ben writes this goes to 185. He says, we're even more excited about Blackwell than we were before. Giving up on Nvidia with Hopper, meaning the current cycle, Ben says, is like giving up on Apple after iPhone 1 or 2. And they've got some fresh estimates, David, on hyperscaler CapEx. 282 is their number.
282 billion over what period of time?
Year on year. It'll be up 24 year on year. And that's including Oracle, Amazon, Meta. I'm not sure how it compares to some of the Morgan Stanley numbers we got.
That was over 100. Yeah, I mean, right. They were 300. That's right. Yeah, I got to check the numbers. Something has been interesting, though, that I've sort of been trying to focus on. There was an information story from last week. I also listened to this podcast that Mark Andreessen and Ben Horowitz do. It was actually done prior to the election, but it has nothing to do with that. It was about, or at least they raised the idea that the progress of the large language models, particularly at OpenAI, is slowing dramatically from one model to the next, so to speak. And the information in the story also talks about Orion. That's the upcoming flagship model, I guess its code name there. Its performance did exceed that of prior models, but the increase in quality was far smaller compared with the jump between ChatGPT 3 and ChatGPT 4. Those are the last two models, of course. And Andreessen said the same thing on that podcast. I just flagging it because it's kind of interesting. Are they running out of data? What is the reason? Is it true? Is there really a slowing in progress? Because that wasn't expected. If in fact, and they're using as many or more CPUs, so it's not like it's a chip-related issue. It simply may be either a data-related issue or unclear. Certainly, for me, unclear, Carl. But that would have big ramifications if the progress suddenly stops.
I know. The other, and not to get too far afield from what you're saying, Andreessen tweeted the other day, called America an economic coiled spring.
Saw that.
We should be growing at least 4, and ideally 6 to 8 plus % on GDP. He says growth has been brutally suppressed since before I was born. That would be interesting. But then we get back to these. We had these discussions during the first Trump term, and that is you need people. And how are you going to get that kind of growth without people?
Right. Well, maybe it's going to be robots.
Generative AI.
Yeah.
That's how
But maybe if it stops progressing, Sarah, that's the point. Listen, I'll listen to Mark Andreessen and many other experts on this, certainly Jensen. I have no idea, but that story, citing people at ChatGPT as the sources, and then Andreessen just basically saying it on the podcast as well, I thought was interesting.
It is because we all think it's on a one-way ticket,
correct.
faster and higher.
Correct. I mean, and by the way, the rate of change will only increase.